Breaking news today: after Putin reinstated currency controls, the ruble appreciated. To prevent the ruble from collapsing after Russia's full-scale invasion of Ukraine in 2022, Moscow has imposed capital controls. Following President Putin's order on Thursday to have some exporters sell foreign currency earnings to bolster the ruble soared against the US dollar. Following Russia's full-scale invasion of Ukraine last year, the ruble plummeted to a record low, but after Moscow imposed similar capital controls, it recovered to a 7-year high. However, the currency has been on a downward trend this year due to the combined effects of capital outflows, declining exports, and rising imports, according to Yevgeny Kogan, a professor at Russia's Higher School of Economics. Today the ruble will strengthen. Even by the end of the year we will see the ruble at 88 to 92 per dollar. Earlier in the day, the ruble hit a high of 96.4550, its strongest since September 27, 2023. By the time trading began just before 2 p.m. Central European Time, the ruble had gained 3.2% against the dollar, trading at 97.00. Kogan cautioned, however, that companies would base their plans on a ruble rate of 100 to 105 by 2025 to 2026. With its 3.4% increase, the ruble is now worth 102.95 euros and 13.29 yuan. Sberbank CEO German Gref predicted that the ruble would strengthen to around 90 per dollar. If the parameters of our export goods remain the same, some more strengthening is possible, he was quoted as saying by the TASS news agency. The regular, fundamental exchange rate today is 85 to 90 per dollar. The ruble was saved by what? After the ruble dropped into triple digits in August, the government announced late Wednesday that Putin had signed a decree reintroducing capital controls for an undisclosed list of exporting firms. Even after the central bank raised interest rates by 350 basis points in an emergency, the ruble continued to fall this week, reaching a new 18-month low of 102.3450. A harbinger of doom? Companies will be required to submit plans to the Bank of Russia and Rosfinmonitoring, Russia's financial monitoring agency, for the duration of the new capital controls, which the government has said will be 6 months. According to First Deputy Prime Minister Andrei Belousov, the main purpose of these measures is to create long-term conditions for increasing the transparency and predictability of the FX market, reducing the opportunity for currency speculation. The central bank reversed course and supported the measures after previously expressing concerns about the ineffectiveness of currency controls. The bank announced the changes on Thursday, saying they would increase liquidity and decrease volatility in the short term. The conflict between Israel and Hamas and how Russia might benefit from it. Russian and Caucasian chaos is being caused by former Wagner forces, and the Kremlin doesn't care. The ruble is even less tradable for foreign investors after Russia reimposed some capital controls, said Pyotr Madis, senior FX analyst at In Touch Capital Markets. This decision can be interpreted at least by some market participants as a sign of despair to stabilize the ruble. The RTS index of Russian stocks in dollars rose by over 2%, while the MOEX Russian index in rubles dropped by 1%.